Good day, ladies and gentlemen. So today I want to share a secret information that will help improve and increase your win rates in an explosive manner. So if that is something you would like to happen, then you need to pay absolute attention to this particular video, okay? So this secret information I want to share will actually favor the SMC or ICT traders, those that love to trade with fair value gaps, breaker blocks, etc., stuff like that. You understand? So if you want to increase your win rates, anytime you are studying the charts and you're looking for opportunities, only take opportunities where you have overlapping PD arrays. Okay, so PD arrays are simply premium and discount arrays. You already know what those are. They're like fair value gaps, just like what I mentioned, breaker blocks and all this kind of stuff. So only look for where your PD arrays are intersecting, where they are overlapping. Okay, where you have a PD array to the left aligning with a PD array to the right, which you actually want to consider. So those are the kind of stuff you should only consider. I will give you a scenario that will help open your eyes to what I'm trying to say. Now, you probably have noticed a situation whereby you have a fair value gap formed to your left like this, a bearish fair value gap. Let me start with that. So you have a bearish fair value gap to your left, something of this nature. I'm trying to be quick. So you have this. Okay, so this is a bearish fair value gap because the wick of the first candle does not intersect with the wick of the third candle. Okay, so this is a bearish fair value gap, for example. Now you have a bearish fair value gap. You are waiting for price to come into that fair value gap and then give you an opportunity to sell. Okay, so while you place your trade and you're waiting for price to come into that gap and give you an opportunity to sell, what you noticed is that price just went past the fair value gap as if it's not there. But while price was doing that, price also printed a new fair value gap, which is now bullish. So you have a bullish fair value gap to the right and a bearish fair value gap to the left, which just failed. Okay, so and by the time you check it, you notice that the fair value gap to the left is aligning or in the same line with the fair value gap to the right. Then the fair value gap to the right ends up working because price pulls back into it and then pushes in the upwards direction. I don't know if anyone has gone through, I've seen such a scenario play out. If you've seen it play out, please, say it in the comment section so that other people can know that yes, these kind of situations have played out before. I've seen it play out many times. Okay, so when you have fair value gaps aligning like that, they are more powerful. Instead of you just seeing a single fair value gap and entering on that particular fair value gap, try to look to your left to see if there's another PD array. It could be a breaker block, to the left that aligns with where your fair value gap is. So when you draw your fair value gap, check the left hand side to see if there's another PD array there. If there is one, then your fair value gap is high probability. That's what you would only focus on to take your trades in order to increase the number of trades you win. Because if you're only taking your trades on fair value gaps, you are not 100% certain. The fair value gap can be, it can be inverted. You have inverted fair value gaps. Inverted fair value gaps are fair value gaps that failed. So instead of it behaving as a bullish fair value gap, it turns around to behave like a bearish fair value gap. That's when we say the fair value gap was inverted. You understand? So I'm going to show you a few examples. I think I have about 2 examples marked out for you. Okay, so look at this. Okay, look at this fair value gap right here. You have this. I'm trying to. Here's the second horizontal line. I'm trying to draw out the fair value gap. So you have this, and then you have this right here. Okay, that's not the fair value gap I'm trying to point out because that does not align with anything. So you have this, okay, and you have this. Okay, so in between, hope you can see the fair value gap clearly. So there is a gap here, which is our FVG. Okay, so What's going to make this FVG high probability? I'll simply look to the left. So to the left, you can see that the FVG is aligning with a breaker block. This right here is a breaker block. Okay. This right here, let me move this down so I can see clearly. This right here is a breaker block. Look at this. This right here is a breaker block. Okay. This is a breaker block. So the FVG is aligning with this breaker block right here. So there's a breaker block within the FVG, giving you a higher probability that this FVG is going to work because there's a breaker block inside of it. Okay, a breaker block is simply an order block that was inverted. That's the best way to envisage or like to view breaker blocks. Okay, so a breaker block is simply an order block that's been broken through by price. Okay, so you can see it's an order block. Price shots up from there and then retested it to give you a buy trade, but that's not what we are talking about. Then price broke through the order block, making it a breaker block. Good. So a breaker block is now within your new FVG that just formed. Take your trade with confidence, guys. Take your trade with confidence. This has a 90% accuracy of playing out. 90% accuracy of playing out. You can see the way price tapped back into it, tapped into the level of the breaker block, then started shooting in the downwards direction. Okay, if you are getting value, please subscribe to the channel. That's the only way you encourage me to keep up coming with these secrets, to help you become a better trader. I think I have one more example for you. Okay, so look at this FVG right here. There's an FVG right here. So I'm going to mark out the FVG with horizontal lines so you can see it clearly. Look at this. The second line is right here. Okay, same thing. Look to the left. What do we have to the left? We have a breaker block right here. Okay, we have a breaker block right here. So from this look at the breaker block. Let me point it out clearly. This is the breaker block right here. Okay, so it's like an order block from which price pushed in the downwards direction. So when price came back there, price did what? Broke through it. So it's now a breaker block. And as price was breaking through it, price gave us an FVG, which is this space right here. You can see the way it aligns perfectly with this breaker block. So it's very, very solid. Okay, so the ideology behind it is if the fair value gap wants to fail, the breaker block will not let it fail, because breaker block is a place where you can also take trades from. Okay, so it's like double confluence. Okay, so you have like two things that can push price up, so making it more solid. Okay, it's like using adding, what's it called? I think adding carbon to iron makes it steel, right? So steel is stronger than iron, you understand? So that's what is going on here. It's like a double arrangement waiting to push price up, and you can see what happened. Price traded back into it and pushed in the upwards direction. Okay, so it even came back again and it pushed to the upward direction, showing you that that level is a very strong and solid level. All right, so if you're a new viewer, please subscribe and turn on the notification bell. I'll see you in the next video. Thanks for watching.